What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Today, I'm joined with Lajide. Can you believe that I pronounce it Lajide? The way I remember it is Laji is spicy chicken, and day I'm thinking like Taco Tuesday, Lajide. But how you doing today, my man?
Yeah, I'm doing good, bro. How you doing?
I'm fantastic, because after all, I don't know if you're aware of this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview people in the commercial real estate space. That means buyers, sellers, deal sponsors, all that kind of stuff. And you may ask yourself, why are you doing that? And the answer is, if you've ever heard of the off-market deals, the ones you're not supposed to publicly discuss, they're sometimes called 506B deals, well, you need to know that you have to have a documented substantive relationship or the SEC will get ants in its pants and it might just steal your business, and that's bad. So I have people on here, we talk about core competency, find out the level of sophistication, where you're really focusing in the business. But, Lajide, do you want to introduce yourself a little bit before we get started?
Yeah. My name is Lajide Richard Lawoyin. Most people call me Richard. I'm a physician. I work in the ICU in Georgia, living around the Statesboro area. Apart from that, I do real estate on the side, mostly passively, more recently, more actively. That's what I do.
Awesome. And before we get to the first segment here, I gotta say, but wait, check your 8. Now, I know that you're in an airport right now, so I'm not sure if you can do this, but maybe you can try anyway. Can you try to look down in your device, like inside the user's device down there, there might be this big hideous subscribe button, and maybe they should, get rid of, because okay, it's a stupid joke, but I've been doing it for all this stuff. So the first segment we have here is the 5 distinct motivations. We're in a bit of a time crunch, so we're going to do this as quickly as possible. But if you're going to be doing real estate deals with people, you need to know what's going to get them out of bed in the morning, what's going to keep them from throwing in the towel if the going gets tough. And I found that even though everybody has their own unique reason why they do this, I found they fit pretty neatly into these 5 different categories. The first one of which is preservation of purchasing power. If you're a physician, engineer, or retiree, something like that, chances are this is the big one for you. The fact is, inflation will eat away from your nest egg, and so you have to get it working for you. But the people who are in this situation, the reason why they're investing in real estate is because not so much that they have to have a deal every 10 seconds. They, basically they have enough money to get by, and they have to make sure that their money's working for them. I'm personally not to this point in my journey. What describes me a whole lot better is trading time directly for wealth. I got a background in technology, specifically the CRM space. I opened up my CRM agency back in 2011, and that's how I got my start into real estate, oddly enough. But when I saw my old boss flipping 10 houses a month or doing 10 house transactions a month, that's when I ended up saying, like, well, I'm clearly in the right business, but on the wrong side of it. So that's why I ended up making the switch to real estate, getting, those equity multiples, and basically going, instead of bigger and bigger salary and having bigger tax checks, I'm pursuing the deployed capital directly. So that's what I'm up to. And I get that that's pretty subtle, especially for youngsters. They're more interested in hustling like crazy right now so they can take it easy in the future. Or maybe if you're a physician or engineer or attorney or something like that, you just want to have more control over your schedule. So I can put that under the label of fast fast tracking your retirement, but really it's about time freedom, and that's why some people are doing real estate. Now, the fourth one of the bunch, they're just fueled by ambition. They want to buy their entire hometown. They want that great big building with their name on it, the biggest yacht in the pier, that sort of thing, and that's why they're going to be hustling into their 90s. And of course, you don't have to vilify those people quite like they do in some circles, because after all, if you're doing real estate deals, especially apartment deals, things that are a little bit more hands-on, then you need somebody who's not going to be asleep at the wheel. So these are great people to have on your GP team. But the last group of the five, it's some people, they picked a sector of society, or maybe it's animals, the environment, who knows what it is. They've got some sort of pet project, but the fact is you have to have a lot of financial backing if you're going to make a real big impact out there, and that's why some people are making these commercial real estate deals and real estate deals. So Lajide, as far as those five different motivations, what combination of them, of those five different motivations, would you say describes you best? What really jumped out to you?
Well, I think I do it mostly for fun, if you do not, and actually to impact people, especially people in the early stages of their career, early stages of their journey. I just clocked 50 in November of last year, so I'm in the mid stage of life, I tend to want to look back and encourage other people. I've had it rough at some stages, and I'm in a place now where there are some things I don't have to worry about. So I think that impacting knowledge back to the younger folks is what I'm really all about, and encouraging them, inspiring them to do better and not to make some of the mistakes I made.
I love that answer. That's really, really meaningful. And of course, one of the risks we have when we're talking about motivations and inspirations, you run the risk of seeming a little bit optimistic. And the fact is that real estate's a business. There are risks involved. We can't just ignore those. And so one of the questions that really popped out to me, the reason why I have this, is if you've ever been involved in a 506B deal, these private off-market deals that you're not allowed to publicly discuss, then the securities attorney should have insisted that you fill out this really invasive financial questionnaire, asking about your net worth, all sorts of uncomfortable questions. But when I was going through those different questionnaires, one jumped out to me as basically lacking utility. In other words, it didn't matter which of the multiple choice answers you chose. I felt like you didn't really know the truth about that person because of the subjective nature. And so I ended up making my own one, which is a fill in the blanks question. It is. There are many popular investment asset classes, but I think blank is too risky. So Lajide, it can be inside real estate, it can be outside real estate, it can be both. What's too risky for you to invest in?
Yeah, I actually I lost it for a second there. I think there's something wrong with that. But I see the question that you're asking. Which one do I think is too risky? Well, I think that there's risk involved in every aspect of real estate. So we are talking about just every investment assets, not including or just strictly real estate.
Yeah, any or both. If you have one of each, go ahead,
Okay.
or if just whatever jumps
Okay.
out to you.
In real estate, I would think that having single family homes is the most risky for me, because once you lose your tenant, you're 100% down. And I've done this before. I currently have 33 doors, so I've done it all in the past. But if we're talking about all investments put together, I'm not a big fan of the stock market. I lost a lot of money way back when I didn't really have a lot. So so I kind of have like the PTSD from it. But I still have some money in the stock market, but they're managed by other people. I wouldn't do that myself anymore, because I was into the penny stocks and all that, and I lost all my stuff. So
Yeah,
I
yeah,
remember that very well.
I definitely can relate. And my next question, I originally avoided this when I first started doing the Dan Does Deals Chance Encounters because I thought that if somebody is on the marketing side of things, it's kind of too much of a fastball for them. But no matter who you are, you're going to have to be a curator of deals. And so you're going to have to know a few of the different numbers that are out there, and you pick and you choose your deals based on those different numbers. And so if you want to take a look, I have a list of it's like 12 or 14 of these. Yeah, it looks like it's 14 of them, and I'll list them all for anybody in the audience who's listening and not watching. But you can just pick like a top 3 or something like that. The first one is cash on cash. Then you've got IRR, which is internal rate of return. In other words, the equity multiples, the cost per door, the net operating income, the going in cap rate, and basically that is compared to other cap rates that are in that area. It basically means like what kind of discount are you really getting compared to similar properties. Then there's the loan interest rate, especially if you're going to be assuming a loan. Then you have the occupancy, which is the inverse of the vacancy, so it's the same number but just inverted. The average income where the property is located, the amortization period of the loan, which is especially important if you're going to be assuming one. Then there's the difference between the market versus the in-place rents. There's the population growth where the property is located. There's the sponsorship record. In other words, how many deals have already gone full cycle, how many deals are on the go right now. Then there's the waterfall split or exit strategy, which is basically what's going to happen to your principal after the deal has already completed. In other words, you basically stay in, or you basically bought out once you do a cash out refinance, that sort of thing. And then the last one I have here is DSCR, which is the debt service coverage ratio, which is basically how much of the revenue from rents and amenities goes out the door immediately just in the form of the loan. Now, of course, it's not an exhaustive list, so Lajide, if they have another one that you like more, then go ahead and say that. But what are the ones that you tend to hone in on?
Are you hearing me, though?
Yep, I can hear you.
Can't hear you right now, but I'll just say this. I see the list that you put on, and generally I with my deals, I try to look at obviously the cost and oh yeah, I think I got it back now. I think it's the airport thing. I think it's coming from my side, but I look at my cost, obviously the interest, the loan interest. Occupancy is huge because, like I said, that's why I don't do single family. I still have one single family home. I've had several in the past, so most of them. But definitely, occupancy is huge because having at least, commercial real estate, when you have a lot of multifamily, anything more than 4 units and above, it's better for your bottom line. And so those are the metrics that I look at. Population growth, you don't want to buy somewhere where it's a one-horse pony, or there's really not much happening there, or the place is emptying out. That would be because I actually have a property in the middle of nowhere, and I pay daily for that.
Yep. I love that answer. It's fantastic. I'm just eating that up like a delicious subscribe sandwich. Isn't that amazing, right? But that's my little segue to know it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different key roles in a commercial real estate deal. And I go through every side in every episode so that you in the audience, are able to better understand how my guest fits into these deals and what role they're actually going to do. And if you're watching this and going, hey, I really need to get one of those cubes, well, the good news is it's absolutely free. You can go to dandoesdeals.com. There's this big conspicuous button where you can click on it and print out your one of these. So we're on a time crunch, so let's go through this as quickly as we can. The first role I'm going to talk about is the repositioner. And I got there we go. The repositioner looks at a bunch of different deals. They're deal finders. They're the brains behind how are they going to change how the business is run. so that they can find more upside. Now, of course, when it comes to finding upside, there's a few different ways to do it, and I find that the most confusing one of the bunch for people who are new to the scene is the financier role. A repositioner has to have a big network of financiers, just because it's a very capital intensive business, and if you can secure a more advantageous loan, in other words cheaper money, then that's going to go straight to the bottom line. Now, typically physicians, when they're in real estate, they'll have a lot of financier roles, and that's what that's all about. But the next role in the deal that the repositioner is going to have is they're going to have an operations person. The operations person is in charge of collecting rents and unclogging toilets and all that kind of stuff. Me personally, in my GP experience, I've been involved in the different asset management, but the other more or less unique thing that I bring to the table is understanding that occupancy is the enemy in terms of vacancy. If you've got a bunch of empty rooms, then you're going to be it's going to be killing your deal, and that's really, really bad. So somebody on the GP team is going to have some serious marketing chops to make those operations really happen, to fill those units. But the next thing that a repositioner is likely to do, they'll end up getting a contractor team involved to do capital expenditure. In other words, they will end up making the place nicer so you can charge more in rent. So that is what they are involved in, and somebody has to keep an eye on those contractors to make sure that they're keeping the schedule, they're not using subpar materials and all that sort of thing. And so that is the role of a local, the boots on the ground, the person who can be there in an hour or two, because I don't know if you know this about me, but I'm from the internet. So that's not going to be me, okay? I need somebody who can be there in an hour to check in, make sure whatever's going on, because I'd still be stuck at an airport like Lajide if there was an emergency. So that is 5 of the 6 roles. The last of the roles, it's good to do a hypothetical to understand it. So if you are a successful professional, maybe you're an engineer, a physician, attorney, something like that, you'll say, hey, I know how to buy a house. I get the down payment, and then I go to the bank and I get the loan for the rest of it. So full of confidence, you find this property, you say, hey, I bet you if I get $100,000 from each of my friends, we could take over that 300 unit apartment complex. So you turn around to the banks, the financiers, and you say, hey, I want to buy that 300 unit apartment complex for tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? Well, they're going to ask you one question, and you better have a good answer to it, and that is, who's your sponsor? Who's your KP? See, in order for you to be eligible for the loan, somebody in the fold has to already own a similar asset. In other words, they have to have the net worth and the actual property, be able to prove to the bank that you can actually run this property without running it into the ground and losing all of the depositor's money in the sense of the loan itself. So that is the other main loan. On top of that, you need a certain amount of liquidity to prove you can continue running it, and you need a balance sheet among the GP team of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. Now, Lajide, it looked like we cut out for a second. I did mention that physicians are very typically, involved in the financier side of it, and then of course there's going to be some repositioning and asset management roles. Is that the best description of your involvement, or what exactly is? Yeah, go ahead.
Yeah. That's most of it. I've been in real estate since 2011. I've done most of this passively. I just buy properties and hold for myself, do some flipping. So I've done all of that with my wife. But about a year ago, I looked more into the GP part of things, especially raising capital. So I'm able to, talk to people that I've worked with for several years who are high income earners, and present a deal to them, and if they like it, show them all the numbers, be as transparent, and allow them to go back and talk to their CPA or their financial advisors with all the numbers, and so no pressure, just check everything out. If you're happy with it, and then they'll come back and invest.
All right, I love it. So Perfect. So let's talk about your buy box. And so when real estate professionals are talking about your buy box, we're asking about three main things. The first one's geography. Where is it? Which state, which county, possibly even which neighborhood? It's absolutely going to matter. The second one is going to be size. Now, if you're talking about apartment complexes, usually when you talk about size, you're talking about the unit count. In other words, how many apartment units does it have? And the reason why it's relevant is because the type of company that's going to be focusing on, 5 or 10 unit apartment complexes, they're going to be fundamentally different from the ones that are taking down 100, 150, 300, and so on. Those types of apartment complexes, so that size matters. Now, of course, there are other types of real estate, like commercial real estate, like where, sometimes they go off of square footage, like warehouses and things like that, medical facilities, they won't go necessarily off of unit count, but still that size consideration still applies. Now, the third one is usually called class. I prefer the term desirability because it's more than one thing. Specifically, you're talking about the condition and then the area. If you're talking about condition, you're talking about how old is it, how beat up is it, how recent is it, what sort of luxuries and amenities does the property have to make it more exciting to live there or rent there. That's the condition. Now, when you're talking about the area, though, there are a few different things. There's the old broker trope of location, location, location. I don't like that term just because I think what they really mean is traffic, traffic, traffic. If a gazillion people pass by a property every single day, it's going to have some automatic desirability built in there. But on top of that, the area is also considering the crime rate where the property is located, and if it's residential like an apartment complex, the school districts are also going to be very important. But both the area and the condition are broken down the same way as in grade school, where you've got A plus at the top, and then A minus, then B plus, and so on. So Lajide, as far as those three different parts of the buy box, what are you really seeking more than anything else?
Yeah, most of the time I seek a B, so I want to, if it's in an A area, that's great. So I like to see something that you can add value to, so buy and add some value to it, and hopefully exit once when the market is right.
Mm-hmm, mm-hmm. And what about states or counties?
Well, currently we just closed a deal in Atlanta, Georgia. Has 268 units. Closed it for close to 50 M. So we are looking at another deal now for about 26 M.
Mm-hmm.
It's
All
also
right.
the other one is outside Atlanta, but it's in Georgia as well. But I have properties in Michigan, in Indiana, in Florida, and in Savannah.
All right, perfect. So then the next question has to do with people, and that's my favorite part of this industry. It's not a bunch of introverted tech people like I'm used to. It's people are really interested in meeting more people. But at the end of the day, since we all have our own unique skill sets, at the end of the day, push comes to shove, you have to admit that we all have our own people that we can help disproportionately. Me personally, because of my marketing and tech and social media, this podcasting gig, all that sort of stuff, generally it's the sponsors and KPs that I've always been eager to meet just because they have the foundation where a guy like me can make a bigger difference. Of course, everybody is ultimately in the business of deploying capital, so financiers, passive investors, especially with my recent activities in a debt fund, they're also the other people that I'm looking to meet too. But in the context of these interviews, I got to meet everybody. So Lajide, as far as the different roles in a real estate deal, who's out there in the audience that you're most eager to speak to?
Yeah, I will be eager to speak to anybody. I currently have a team, so I work with another capital raising company, so they have the underwriters and people like that. But I am basically a capital raiser, so anybody that wants to raise capital, I'd love to talk to them. That can help me in that regard. So I am. And obviously would always need people to kind of partner in that space. I'm thinking that maybe in the future I may move to other parts of real estate as well. So I'm really available for networking I really love to meet people and talk to them, pick their brains, tell them what I know, learn from them what they know. I'll be willing to talk to anybody.
All right, perfect. And so then people in the audience must be thinking, how do I reach out? And I'll just sandbag that for a second by talking about myself. You'll notice that I have a pretty distinct last name. It makes me really easy to find, and LinkedIn is the social media platform where I spend most of my time. That's a fantastic way to reach out to me. You can check out Dan Does Deals. The other thing you can check out is chesswithinvestors.com. That's kind of my pet project as far as a podcast goes. We talk about real estate over a live game of chess, and so it's pretty neat because it's not this go kind of format like these chance encounters. But Lajide, as far as you go, what's the best way to reach out? A website, phone, email, social media?
Yeah. So LinkedIn would be where I usually at as well. It's just my name, Lajide Richard Lawoyin. So my last name is spelled Lawoyin. People can reach out to me on LinkedIn. I work with a group called Excite Capital, that XSITE Capital, and I just formed my own company. It's called 3DSSS Capital Investment. We have a website as well, so 3DSSS Capital Investment. So go to the Excite Capital, 3DSSS Capital Investment, and you can reach out to me on my email is my first initial and my last name at gmail.com. That's LLAWOYIN at gmail.com. And I have another one, just the same thing, at 3DSScapital.com. So any of those two emails is good.
All right, perfect. And that brings me to the last part, which is my public service announcement. Now, of course, I'm not a health professional or anything like that, but if you've been watching this episode and experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button that's just down there, and if you just hit it, it'll get out of you. And full disclosure, it doesn't cost you anything. The reason why I want people to hit it is so that those deadbeats at YouTube start paying for these videos instead of me. I think that would be amazing, and the trade-off to you is my videos may show up on your list of suggestions. There's no guarantee of that, but quite frankly, even if you want to ignore those suggestions, that's fine with me. I just appreciate the fact that you spent this time with me. Just like Lajide, I appreciate this. This has been awesome.
Yeah, it's been awesome being with you, brother. I really, really enjoy every second of it.
Sweet. Awesome. Thanks.
All right.
Does nothing but put more money in the pot.
Right.
If we talk about just the investor side, I mean, Shane talked about the sponsor side a little bit. I'll talk about the investor side. Okay, so you want the most money in terms of return with the least risk. All right, you want to do it yourself, you can go get 13 or 14%. You're going to do all the underwriting, it's not going to be passive.
If you bet, probably not.
I think I'd have to bet at least $2,500 before they fold.
And the pot is
4,000.
4,000. Yeah, I think you're right, but I'd rather just check.
Okay.
First position, you have the right of collection and the right of foreclosure or sheriff's sale, wherever you're at.